So, sitting here with TK Kuegler, yes, who's one of the founding partners of Wasabi Ventures, and we're talking VCs because this is something that no one knows about, and people want to talk about. So, okay, so first of all, what's Wasabi? What do you guys do?
So we're an early stage VC firm with a very unique model in that when I say early stage, 40% of our investments are pre-product, pre-revenue. Okay. So super early stage. And what even makes it more unique is in a third of all the deals we do, we're actually more co-founder than we are investor. We literally take somebody with or without an idea and build a company from scratch with them.
So when you're saying pre-product, you're literally like, guy has an idea, this is what...
Or may not have an idea.
Okay.
Literally just somebody we found and we like.
You'll bet on the team.
And we'll bet on the team. Which is, frankly, at the early stage, all you're betting on anyway.
Okay.
So.
How long have you been doing this?
Wasabi started in 2003. I've been in the startup world as a founder first and then an investor since '94.
Okay, cool. What was one of your companies that you founded? Or
I did 3 companies in the '90s.
Okay.
Sort of the old .com days.
Sure,
back in the crazy days. But the biggest one that people would know is a company called Spinbox, which was a ad-serving ad network.
Cool. Back
in the dark days.
We were talking before I hit the record button because we just get going. Is I hear from a lot of folks that they say, "Oh, if only we had funding, this would solve all the problems." And typically, that's not the solution. And you were just talking about why that is never a solution. Can you elaborate on that?
Yeah. So just a couple metrics to give you some ideas here. At Wasabi, we hear an average week for us is in the range of 120 pitches. Wow. So we hear a lot of stuff, and we're bi-coastal, so so we have offices in a lot of places. So we hear a lot of different things from a lot of different people. So, but 120, 6,000 a year, 30,000 in the last 5 years. So with that framework in mind, I would say 90% of the pitches that I hear end with me saying, "Please stop raising money." That me personally, and I probably hear 20-ish a week.
Okay.
Myself. And the reason I say that is that most of the time, especially at the earliest stages, people think money is going to solve one of the problems they have. If I just had money, I mean, this is how the conversation goes. If we had this money, we would be able to do this. And the answer is almost the 99.999% of the time is no. The money will not solve any of your problems. It will just exasperate and magnify those problems. If your go-to-market strategy isn't working at $5,000 a month, it isn't magically going to work at $50,000 or $100,000 a month. If you haven't been able to attract those first couple engineers, having a couple $100,000 in the bank to get that started probably isn't going to attract the right ones either. So if you can't do it with...
And why is that? Because the good ones don't do it for the money?
Good ones don't do it for the money. Okay. They believe in your process. Now, of course, people have to get paid and you have to do things. But if you can't get them for a short period of time to commit to you... On a vision.
Then you're screwed.
Then you're probably got problems anyway, and a $500,000 seed round is not going to change the world for you.
What are the kinds of companies that you guys... Okay, so let's take the Wasabi hat off for a second. And from venture. What is a venture capitalist? Because this is... we got to start from scratch here.
Yeah, so the quick and short answer is that we take a pool of money that exists, not our own money, but a pool of money that people have given us, and then we invest it in startups. And startups being defined as high growth technology companies with a chance of an exit in the next 5 years.
Okay.
That's.
And so an exit is an IPO, acquisition?
Any of those.
Okay.
A buyout of some kind of leverage buyout even, some PE firm, private equity firm comes in and says, we really love this business and we want to buy the whole thing. That's an exit. Anything that gets the investors' money back to them that they put in with a return.
What are some of the things that, I hear a lot, or have a lot. You hear a lot of bad ideas, and you hear a lot of good ideas, right? You probably hear a lot of similar ideas. What are some of the things that you guys look for as an investment firm? What are the qualities of, who are the people that you like to talk to versus the people you don't want to talk to?
Yeah, that's a really good question. So first of all, it's all down to the people. Remember, we're early stage. We actually, I tell my staff internally at WV, if you see a spreadsheet that has numbers on it, we're probably not interested. Doesn't mean you can't have a model and a numbers while you're pitching, obviously. But in our world, in what we do, we don't care about the numbers, because if there are numbers, they probably don't mean anything. We're looking all at the people. And what we're looking with those people is, how do they articulate what they're trying to work on? How do they defend what they're trying to work on? That's what I'm trying to feel out. Are these people I want to work with? So that's, to us, it's all about the people. It's all about the people and who the team is today. And the team can be one person, just so we're clear. You know, one of the biggest jokes, if you listen when I listen to pitches, you'll hear, if you sat with me all day and listened to pitches, you would hear the same things all day. And one of the things that happens at pitches is people will say things like, we are working on this. And there's only one person in front of you. And so I instantly stopped them and then said, okay, tell me about the we. And lo and behold, when you really dig down to it, most of the time the we doesn't exist. They've been told.
Is that a red flag for you or not?
It's a red flag.
Okay.
It's a red flag because they're delusional.
Okay.
You know, it doesn't kill it. Once again, red flags aren't black flags, but red flags are red flags.
Is it stronger if someone approaches you from a we or an I? Like if someone's right up front and say,
me personally, I want to hear an I.
Okay.
I don't want to hear a we. Other people later in the stack want to hear a we.
Okay.
We meaning Wasabi Ventures, want to hear I want to hear this is what I'm doing now. Or if there are two founders, you know, it's a two-person team, and it's an obvious two-person team at this point. We is fine, you know. But what I don't want to hear, which is a big red flag, is the we, and it's one person with 72 advisors, which is, you often see that. You know, my team of advisors. Well, if you got like a dozen of those people, one, they're not really giving you any time, so there's no real we. You know, tell me about the people who are with you every second of every day working on this.
When you're talking with, when the people that are pitching you are typically a lot of these founders, is this their first go around at a startup, and is it something that a lot of them are working on full time, or a lot of them kind of, you know, fleshing this out as they're working on another project?
We're probably unique in that we love talking to people who are doing this part time.
Okay.
You'll hear a lot of, once again, you have to understand there's a continuum of the VC world, of the VC investing world. You know, there are people that play at the early stage, and then middle stage, and later, and then really late stage, you know. So we're at that very early part of the funnel. So having people doing it part-time and figuring it out, that's where we play.
Okay.
You could have someone else here sitting in front of you doing this interview who's also a VC who would say, yeah, if they're not doing it full-time, we don't even talk to them, which is okay for them too. It's just a continuum of where they like to touch things. We like to touch things early.
Okay, cool. Is there, when you're talking, we were talking earlier, and you say, you were telling me you are working with dozens of companies. So
Dozens.
And we don't have to get into the number if you don't want to, but like, what's a, you know, can I ask you like what a good success rate is from a venture capitalist perspective?
The general rules, the general rules in the industry are things that are built that pre-seed, meaning they haven't taken in any external money of any kind, even friends and family. It's just like bootstrapping-ish type of situation, or, you know, grandma gave them 20 grand to kind of play with this. So those situations, it's about 1 in 80 are successful.
Wow.
So pre-seed, from that aspect to successful, meaning at the end of the day, people make more money than what they put into it. So we're just going to define a success.
1 in 80, like
1 in 80 is kind of the number.
Okay.
But once they get, and if you close a seed round, the number drops. Let's just say 1 in 40.
Okay.
You get to a full A round, meaning institutional investors are now investing, and you're raising, you know, multiple millions of dollars. The number drops into sort of 1 in 12-ish range across the whole industry.
Cool.
You know, the startup world.
Okay.
And the numbers vary there. There's actually a really great study that a buddy of mine did that showed that if the founder graduated from a handful of schools, the numbers actually cut in half all the way across. You know, so that's you know, MIT, Harvard, Caltech, the usual suspects.
Sure.
If those are where the founders are from, the numbers change pretty quickly.
So
almost to the
there's not a formula, but there's a preferred ingredients list.
There's a preferred ingredients list, if not a formula. Yes.
What are the kinds of people that you look for when you're betting on a team? You know, what are the like if we're working with if meeting an entrepreneur or someone that is interested in the business, what do you find makes a good founder?
It's interesting. I wrote an article about this maybe 3 years ago. One of the things is ex-athletes, people who played at a very high level, not necessarily professional, but in college or very competitive in something. And they're no longer that, but they bring those aspects to the table. They do surprisingly well. Why? Because they're used to winning and losing, and there's a lot of losing in the startup world.
Sure.
Every single day is winning and losing. They know it takes hard work, and they have some reliance on God-given ability, but it isn't. They just don't think they roll off the turnip truck and all of a sudden now I'm a winner. They literally know they're going to have to put some work in here to make this happen, but I have to have some ability, some belief in their abilities to make that work. And so anyway, I don't want to say it's just ex-athletes, but those same attributes are what makes it work for a lot of people. You got to have that ability to know that you're going to win and lose a lot, and that's the lifestyle that you want. And that's not for everybody.
Sure.
Yeah. The other thing that I would say that I look for in just listening to a pitch is how well the person defends whatever it is they're defending. I don't necessarily have to agree. I could not agree, actually. And I could say, I don't think that's right. As long as I don't think I'll go back to the word delusional. We're going to be so big, we're going to be $1 billion company in 6 months. Well, great. Fantastic. Go do that with somebody else, because I don't think that's what it's going to happen. And at the opposite end of the extreme, if the dream is way too small, what I'd like to do is spend the next 6 years and build a company that's worth $1 million. Well, that's great. It's just not exciting to me. So,
and that's because you're looking for
got to have some kind of exit. You got to have some kind of
trajectory,
and exponential trajectory, not organic. There's once again, it's not that it's bad. I actually literally just wrote an article not too long ago saying the startup world needs more lifestyle businesses, but lifestyle business
aren't
also
necessarily as attractive to investors.
True, that's correct. And understand that doesn't make it bad. It just makes it not attractive and not fundable.
Interesting. What are at what point would you work with a company and say, at what point do you guys decide it's time to call it quits, or it's time to pivot, or it's time to fold? Obviously it must vary, but that must happen, right?
All the time. Had a conversation with one this morning.
So how does that conversation go?
In our world, our model is built a lot on trust. So the people we work with, it's a mutual trust thing. So if they know if we're giving feedback, then we're in the same boat they are. We're all in the same boat and we're doing the same rowing. So if it's the conclusion that you're coming to is, I don't think this is going to work. Don't take it personal. I don't think it's going to work. What do we want to do about that? It's more of that kind of conversation. You need to almost have a founder, if that's the conclusion, they need to come to that too. You can't just dictate. This is, now you can if they become, so like, hey, I think you're 100% wrong, and in some ways maybe that's good, because maybe they're right. Once again, people in my spot, if they're honest with themselves, they suck at this. Because everybody does. This is worse than baseball. The joke in baseball, you get 3 hits out of every 10 times and you're a Hall of Famer, right? Yeah. If you get 1 hit out of 12 in my industry, you're a Hall of Famer. So it's even worse. So anybody who says, I'm really good at this, is either delusional or the luckiest man in the world. Because they have just as many losses as they have wins.
Probably exponentially more.
Exponentially more.
What is... for a student or someone that may be looking to, to try entrepreneurship, and I hate to use the word try entrepreneurship, but trying entrepreneurship, what is the one piece of advice you would give them coming from, a venture capital person to someone that's their first go around through this? Just spend more time doing, less time thinking about it. Now that doesn't mean you just it's not jumping off a bridge either. That's doing as well. So I'm not saying don't prep and think about what you're trying to do at all, but spend less time thinking about what you're going to do and more time doing what you want to do. Our job
at Wasabi, really, at the end of the day, is to make sure founders don't make massive mistakes. I want them to make small mistakes every day, because that's how they get better and that's how the business will get smarter. What I try to protect from, what we try to protect from, is the massive implosion mistake. They go in a direction that, definitely can't work, and they spend money in a weird way, or any of those types of things.
And they can't course correct.
And they can't course correct because they're way too committed at one point. They absolutely hire the wrong person. And I'll look at it and say, this person isn't going to work, and here's why. Keep looking. Those are, because early on hires can be a devastating death. A death now. I mean, it can absolutely kill a startup company if they hire the wrong VP of sales. That's one they always mess up, or the wrong CTO, or something like that. They can't recover often. That one hire. So our job is to kind of not let those happen.
Well, it's like you said, the people are the most important part anyway, right? So
that's right.
From your perspective.
That's right. That's right.
All right. I think that's our 101. We'll do this again. Thanks, man. Appreciate it.
Thank you, man.